Hello and welcome to Car Dealer Live. I'm James Batchelor and today we are talking about the April car market and what the next few months might have in store for dealers. Now joining me is Auto Trader Director Ian Plummer. Hello Ian.
Hi there.
Lovely to have you on as always. So Ian, we're at the beginning of May, end of April, beginning of May now. It's an apt time to look back on what was. I mean, it was a crucial month for dealers, obviously, with the reopening of showrooms. I mean, what activity have you been seeing in the market since dealers were able to go back to some kind of normality?
Well, you're quite right. It's been an amazing month. Obviously impacted massively by what happened in the middle of the month, the 12th of April, the day when many consumers were gladly able to return to showrooms, and they did so in huge numbers, as we know. So the first part of April continued what the trends, if you like, that we'd seen through the first months of this year, which were extremely strong levels of demand. Even though people couldn't end up in the showroom, as we said, buying the car physically, they did so and translated that demand into sales at distance. So we saw very high levels of demand on Auto Trader with most of our metrics, whether it be visits, visitors, and so on, up in the 40% on prior year. That translated into very strong sales numbers that we could see in retailers already up sort of to the 90% of previous times compared to, let's say, 2019 levels in March. And that continued into the early part of April. Post the reopening, we've seen numbers that are likely to be around the 30–40% even up on 2019 levels in terms of actual sales numbers. So we've seen continued levels of demand, high interest on our platform now translating through into even stronger levels of sales. Fantastic to see we were doing 80–90% of sales of normal times when dealers were closed. I think that's hugely down to the hard work of retailers and all the rich digital engagement they put in place. But really fantastic to see that we've got these really now positive numbers ahead of prior times, now that showrooms are open and people are able to see, touch, drive, smell the cars and confirm their orders.
I mean, amazing figures, really. I mean, does it take you by surprise, or is this something that we should be expecting, really?
Well, I think we've seen for a while that consumer confidence is pretty high. If you look at all the external metrics on consumer confidence, GfK does the probably most recognized survey in that regard. All the metrics are pointing upwards. You know, we've talked before about the Bank of England data that I think is now widely seen in the media, showing the savings levels that households have built up over the period of the lockdown. Car ownership is considered to be even more important. Just a little less than a third of people we interview and research say that car ownership now feels more important than it was pre-pandemic, beg your pardon. Equally, affordability of cars, when we measure that, we're seeing sort of 8.7 or 8.8 levels out of 10 in our sort of index there. And to give you an idea, that index was showing numbers around 7.98 pre-pandemic. So people feeling confident in their ability to buy a car, wanting to buy a car, and it feels like they've got the money to buy the car. So I think it's quite logical that we're seeing this demand translate, because personal mobility is actually considered to be something we seek because of the pandemic, but also that we enjoy. So long may it last.
Yeah, absolutely. Now, as we saw many times last year, lockdowns have an effect on the types of cars people buy. I mean, with the market opening up now, are we returning to trends seen pre-pandemic, or is it a bit too early to say?
Well, I think it's probably a little bit too early to say in terms of cars people are likely to buy. There's been a strong focus, I think, on premium in many of the last years, and that hasn't been really dented by the pandemic. And I think premium brands seem to be exiting very fast. There's definitely a high interest in electric vehicles, which is only continuing. Most people are saying now, I think around 2/3 of our audience are saying that they feel that the pandemic has definitely affected their view on making more sustainable choices in their lifestyle. And many of them are saying that they're one of the factors, one of the triggers, if you like, that they're going to use to sort of express that is their choice of a next vehicle. And roughly the same amount of people are saying that they're considering a hybrid or electric for the next purchase. So those are some of the factors we're likely to see play out. But I think the biggest one is the for want of a less overused word, the new normal of digital retailing, which has been embraced by retailers, as I touched on, so brilliantly through the periods of lockdown, embraced equally by consumers. It's clearly something they're saying that they're enjoying. that they've added to the sort of research phases of buying a car with the more functional phases of actually trying to buy the car, get finance agreed, get a part exchange value, and so on. So that's what we're really seeing retailers now progressing their propositions with, and consumers really embracing full on and wholeheartedly. It seems to be a big driver of the market, I think.
Yeah, yeah, absolutely. Now we'll talk about the physical and the digital bit in a minute. I just want to continue talking about electric cars. Now, as we know, in the new market, obviously there's month-on-month increases, as you'd expect. But at various points last year, values of electric cars weren't as strong as petrol and diesel cars. They were a little bit sort of up and down, weren't they? I mean, is this still the case, and is this going to sort of continue, do you think?
Well, I think values of electric cars during the pandemic first lockdown were quite slightly paused, like everything else was. They exited slightly slower as well. I think during the first lockdown, we reverted to type and what we knew best, and people, for example, sought more petrol vehicles because it felt like a sort of safe haven. That definitely has shifted back in favour of electric and hybrid now, plug-in hybrid in particular. Since the government's announcement in November of the race to 2035 becoming a race to 2030, that hasn't dented interest. On the contrary, that's piqued even greater interest on our site. We're seeing now around double the amount of ad views of electric vehicles being looked at in March, for example, just gone, compared to just 6 months prior. 3 times the amount of stock available on site, multiples in terms of numbers of different distinct models available on site. So that's growing, that's accelerating demand. That's helping to dampen any impact on potentially sort of softening prices, because demand obviously is a big driver of the necessary balance we need in the market health, if you like. Supply, though, of some product has been increasing slightly faster than even this very strong increasing levels of demand. That's been particularly the case for some of the premium models, where a lot of nearly new models have entered into retailer forecourts and so on in the last few months, at a rate slightly ahead, I'd suggest, of that strong demand. So there is a potential pricing gap that we'll see probably correcting, I think, in that side of the market, much less so in the volume products, where there's a probably slightly more mature market. Ultimately, I think it's not a bad thing either that we see used EV prices becoming more aggressive, because I think we need to see more people able to access EVs at different price brackets. So ultimately, for the consumer, that's not a bad thing.
Yeah, absolutely. I couldn't agree with you more. Now, with showrooms open and people being told to get ready for things to pretty much go back to normal in the summer, I mean, do you think we'll see things in the motor trade return to a pre-pandemic normal? I mean, particularly with customers preferring physical over digital.
I think it's absolutely certain, and we're seeing it since the middle of April, that many consumers, most consumers, love the retail experience. They enjoy the experience in terms of the wow factor and the theatre that the best retailers add to their retailer spaces. They enjoy the advice they get, and they enjoy the feeling, touching, driving, smelling cars that are touched on. Equally, it's absolutely evident that they've expressed their flavour, their taste, if you like, for the more functional aspects of buying a car to be done more easily, flexibly, at my leisure, if you like, at the time that suits me, online. And it's that combination which really is the new normal now. It's the join, if you like, between the digital and the physical, the omni-channel, not just one website, but having my product visible on many sites wherever the consumer may be. That is the new normal, I think, for retailers, because that's the new normal that as consumers we're all living. We're enjoying doing that in all the products we're buying. We're buying probably a third of our retail products now online, according to ONS stats. Why would that be any different for cars? We've shown that it doesn't need to be any different for cars. And I think the retailers that will be winning, the brands that will be winning in the months ahead, will be those that embrace that trustworthy and transparent journey towards digital retailing.
Yeah, yeah, and an interesting piece of research came out from Auto Trader this week about money back guarantees effectively replacing test drives, and that very physical part of buying a car, which is the test drive, which is traditionally the most important bit, is being replaced by this sort of statement of fact of this belief that a customer can actually they're okay about buying a car because they know they can hand it back. It's the dial has shifted very much, hasn't it?
The dial has definitely shifted.
Yeah.
I think we see three different types of customers though in automotive, and this has been the case for a long time, but it's definitely more visibly reflected in how we're dealing with customers right now. So we see it at one end of the spectrum, people happily prepared to buy a car fully online. I think that's a small, low single digits number for the moment. It'll grow. At the other end of the spectrum, there are people who really do want to be in the store and doing at least the completion of the journey in store. And in the middle, the largest chunk of consumers are happy to flex to buy and shop cars on their terms, both online, sorry, and in store. So that's the new normal that we're looking at. And I think to enable that, the retailers that will win will embrace this need to show transparent, trustworthy buying journeys. And for example, that will include things like allowing a test drive to be done in the way that suits the consumer. To the same point about different consumers, our research showed that some want to do the test drive accompanied in retailer. That's no longer the majority. I think it's around 25% or so prefer that method. That's the, if you like, old school method. A larger number want to be able to go to the retailer still, but do the test drive unaccompanied, feeling like they've had an explanation of the vehicle. They don't need somebody sitting next to them. Retailers, when you ask them, are embracing that because they see that as a gain of efficiency. And if it's good for the consumer, more likely to sell more cars, what's not to like? So enabling the consumer to do those things, potentially also to have a test drive at home, potentially to pay for the test drive to be done over a longer time period. That's the kind of more open and more flexible approach to retailing that I think retailers are embracing now, having seen in a forced way, to be fair, that was the only way they could do things in past times. Now it's the way that they probably need to do things in future times.
Yeah, yeah. And I think very much from a customer's perspective, even cars at the cheaper end of the spectrum, new cars, for example, there's so much tech to actually learn and to find out about that a 15-minute test drive is not enough to actually find out about the stuff on the car. So as technology grows with cars, the dealer retail experience has also got to change, hasn't it?
Okay.
Okay, let's just talk about used car prices now. With as we've seen from Auto Trader data, I mean, they've been very, very strong since the beginning of the year. I mean, can we expect this to continue?
I think we can expect it to continue and probably to accelerate, to be frank, James. I think there's a slight reluctance in the market right now from some retailers I hear who are worried that the prices they're seeing are too high. I'd suggest that they're likely to grow further in the weeks and months ahead, simply because the demand levels we're seeing when you're talking about Auto Trader demand are around 40% or so up on 2019. I talked to 2019 obviously because comparisons to the same year or same month in 2020 aren't really so relevant. But that's a huge level of growth of demand. Even if it drops back a little bit, we're probably likely to see demand levels that are higher than previous years. And that's probably likely to see sales levels, I'd suggest, like summer, autumn last year, where we had positive single digit, sometimes high single digit, low single digit numbers compared to prior year. If we see that, then you look at what's happening in terms of supply. Well, there, the biggest factor I think we need to understand is the new car dynamic with the microchip shortages. There are very few brands that are talking to less than a quarter of quite significant disruption. Some that are talking about 18 months of lack of visibility, not necessarily big disruption, but problems. So that's going to dampen supply. And if you slow down the new car proposition, fewer part exchanges coming in, that slows supply of cars into the market, maybe fewer cars going to the fleet channels, which won't be prioritized over retail. That slows, again, the supply. But equally, if you don't have enough new cars available as a franchise dealer and James walks in wanting to buy a new car, there's a very high probability that James will drive out with a nearly new used car instead, which again will boost demand, take out some supply. All of those factors put together, I would expect to see a strong level of price increases in the months ahead. And I don't think retailers should be afraid of that. That's exactly what we saw last summer and autumn, like I said. Those are the months where retailers paid the money for the cars, but they also not just paid increased prices, they saw increased margins too. So I think we need to be courageous, I think, in our buying decisions just now.
Yeah, absolutely. Okay, finally, Ian. Now looking ahead to the rest of May and into the summer, I mean, what's the picture looking like?
Well, I think looking forward, we can expect to see a continuing level of strong demand. If we aren't seeing sort of 40% levels of growth of audience numbers on our site and a similar sales growth in retailers, even if it dampens, I think we should expect to see some good single-digit levels of growth on prior years. If that is also accompanied by strong retained margins, then I would expect, like last summer, autumn, that retailers are able to have a good period of growth during the months ahead. If they're able to engage with digital retailing and find some of those efficiency gains as well on the back of the learnings they've taken from the last period of time and all the work we're trying to do to enable that with our 13,000 or so retailers, I think they can see some cost savings too. Add all that together, and I think there's opportunity. I just give one reference point perhaps to that. When you look back at that period in, let's say, May last year, when we exited the first lockdown, some people talked to just be a pent-up demand, 1 month blip. That clearly wasn't the case. We saw levels of demand on Auto Trader all the way from that period through to the end of the year of 25% growth. Retailers translated that into sales over a long period of time, many months. I'm quite optimistic that we should see something similar in the months ahead, given the kind of metrics we're seeing today.
Yeah, fantastic. Perfect way to end. We're going to have to leave it there today, I'm afraid, Ian, but some fascinating insight there. Thank you so much for joining us.
Thank you.
Well, that's it for today's Car Dealer Live. See you again very shortly. Bye-bye.